All I see is fans with Mario's. All right, we're on. We're on Facebook. So, welcome to MWR Real Estate and U.S. Housing Exchange podcast. Sandra Davis, good evening. Susie, welcome. Good evening. As we're waiting for everyone to log on. Richard from College Park, Georgia, welcome. Good evening, Eugene. Where are you from, Eugene? Let's hear where everyone's from. Let us know where you're logging in from on tonight. We got a lot of good information from our mortgage side of the process. So I know you guys are going to really be excited about what we're going to be presenting tonight. All right, I see you, Lysandra, Swainsboro, Georgia. Juan, Elizabeth, New Jersey. Eugene, welcome from Connecticut. See you, Kim, from Michigan. Brian, Hinesville, Georgia, welcome. I see you, King Street, South Carolina. Harold from Charleston, welcome. Laval from, hello, yeah, see you from Fayetteville. Teresa, all the way from Kansas City. I need to get back over there for some barbecue.
Definitely.
Barbecue. Teresa from Tallahassee. Oh, that's Calvin from Tallahassee. Robert, another Fayetteville, North Carolina. Oh, from my home state, Antonio from Seattle. Great Northwest. Steve Booth, logging in from Philadelphia. I see you. The 215, I see you. Ambrosia, welcome. Anna High from Brooklyn, New York. Kim Miller from Covington, Georgia, welcome. Kenny logging in from Columbus, Georgia. Akadah from Atlanta, Georgia, welcome. Wait a couple more minutes before we get started. Welcome, Teresa. Good to have you on tonight. So we'll wait a couple more minutes. I see you saw from Tallahassee. How those Seminoles doing this year? I know they're going to be looking forward to a better year this year. James, welcome. Indianapolis, Indiana. Chris, Decatur, Georgia, welcome. Georgia strong in the house tonight.
Yes.
Kendall from our nation's capital, welcome, Kendall. Mario from the great state of Michigan. Hope you can help those Michigan Wolverines out this year, Mario. Lolita, Charlotte, North Carolina. Queen City, welcome. Okay. All right. Well, we're going to get started tonight. We have some very good information on tonight. Myself, for those that might not know who I am, I'm Todd Lane. I'm the CIO of the U.S. Housing Exchange. We have on tonight Mario Henry, CEO of U.S. Housing Exchange, and we have our primary duo, dynamic duo, Mr. Keith Felton from Cardinal Financial and Charlene Henry from Cardinal Financial. We're going to be sharing some very good information. I'm sure you're going to be educated tonight on all the different programs that we have from a mortgage perspective and where they fit in to make this whole thing work. So without further ado, I'm going to hand it over to Keith and Charlene, and you guys can take it away with our show on tonight. Keith and Charlene.
Thank you, Todd. Keith, you want to begin?
Thank you very much. Nice to see everyone. I'm glad George is in the house. How's everybody doing? But I think, Charlene, go ahead. I think you're going to introduce a little bit about the process, and then I'll go into some of the programs that they can access that will help them either refinance or purchase a home.
Okay, sure. So, Todd, did you want to share your screen so we can show them where to get started? So okay. I'm here to make sure that you know how the process works so that we can make it very smooth for you so that we can help you with your mortgage needs, whether it's for purchases or refinances. We're here to help. We have a lot of programs. He's going to be talking about those, but we want to make sure you know what to do and where to go so that we can help you. So, Todd, whenever you get a chance to pull that up. So for our people who are interested in a mortgage, whether you want to purchase or refinance, you would go to our ushousingexchange.com site and go to our buyers area. And there you'll have an opportunity to click an apply now button where you'll enter your information.
Let me bring up that screen. I had the wrong one, so let me get that.
That's okay.
Hey, you got to see how fast Charlene can think on her feet, because I know she was staring at that thing like, what is this?
I know what I asked for, but that's okay. I'm not going to throw Todd under the bus. So once you enter your information and it comes over to us, I'm the person that makes sure you get everything that you need in to have a smooth, streamlined process. So Todd has it there on the screen for us. So you see there it says,
No.
Buy or refinance now, and you see the click here, and then you'll see Octane. What Octane is here at Cardinal Financial, we have the best technology to take care of your mortgage needs as well. So as a client, you have this Octane dashboard where you put your information in, you can put your application in, and then as a client, you have the ability to log in and see your information. You can upload things to us if you need to. So it's very seamless, and it makes sure that you don't have to figure anything out. So once you go here and put your information in, one of the most important things, the office that Mario and I work out of, Houston, Texas, you want to put Houston and Texas as your city and state. And then once it comes over to us, we'll assign you to the appropriate office. You can operate in all 50 states. So thank you, Todd, for sharing that. Once you click the apply now and put your application in online, and then I get your application, then I'm the person that contacts you, goes over that information, make sure we have everything we need. Then I collect mortgage documents from you, your finances, bank statements, income, and I get everything together so that when your loan is being processed, everything is there and you have a very clean file, which means things will go smoothly and as quickly as possible.
If we accept you into the U.S. Housing Exchange for the Fire Your Landlord program, you're going to first fill out the application for for the U.S. for the questionnaire, the buyer's questionnaire. Then what's going to happen, we're going to review it. And then if we feel like we're going to go with you, even though your credit may be a little challenged or anything, we still are going to have you go through the same process as what people do with the traditional mortgage. So we can pre-qualify you before we buy you the house. So even if you're going to be in the buyer's program, pay attention to what we're talking about because it still will apply to you.
Keith, did you have anything you wanted me to add, or did you want to go step in from there?
I think you did a great job. One thing I will reinforce is that for you to be able to access all the benefits, you do want to go through our Houston branch. With Cardinal, we do have locations throughout the country because we are a nationwide lender. But the key is for the connection with MWR, U.S. Housing Exchange, you definitely want to go through our Houston branch. Also, with the variety of buyers and people that might want to refinance, you have the self-employed and you have the W-2 clients. So what I'll start with at first is just your W-2 clients. They're going to do a 2-year look back to make sure they have a 2-year history of your job, your credit history, and also your finances. And one of the beautiful things we have now, there are some gaps in that 2-year history for your job. We do have programs that allows up to 6 months of a job gap to be able to still close that loan. Of course, we do have the standard conventional and FHA loans, but we do go into what they call a 10% jumbo loan. So people that are looking to buy homes over $550,000, we do have a 10% program available to you, which is very rare in the industry. Normally, anything over the standard Fannie or Freddie loan, you would have to be upwards of 20% down. So for the clients that are W-2 and self-employed, we do have access to what we call our bank statement program. It just got upgraded to a 90% LTV. So what that means is you would have to put as little as 10% down to be able to take advantage of this program. It can go down to a 620 credit score. So if you come into this, the program and your credit is not up to par, it could take a very little time for you to be able to access that program. So those are for people that might have the W-2s or a combination of both. Now, one of the beautiful programs that I think will match well with the MWR clients are our self-employed programs. So there's a couple of things I want to, talk about with the self-employed borrower. Right now, we have a program that allows you, if you can show that you've been self-employed for 5 years, that we could take 1 year of your tax returns and be able to lend, with a conventional loan, which would be as little as 3% down. But with that being said, a lot of people have not filed their 2020 taxes. This could be the year that you show that you make a major profit and then allow yourself to purchase that beautiful home that you're looking for, or even refinance the current home that you're in and access the current rates. And right now, rates are still very low. We still seeing rates in the 3s. And then for some people, we also have rates in the 2s, especially for the 15-year fixed program. Another program that I think would be beneficial is our down payment assistance programs. And what we're seeing with these, I have a nationwide down payment assistance program that does not allow us to have income liability or income limits, or limit you to the areas that you have to live in. What you'll find out in some areas throughout the country is that you have to live in a certain area, low income area, or a area that's being regentified. With this program, you can live anywhere you would like to. And in some aspects, they can actually lend up to 5% of the down payment, which in some cases, some of that can be used for your closing costs. So with that being said, you have the 1-year tax return program for your self-employed. You have down payment assistance programs for your self-employed. You also have your bank statement programs for the self-employed. Now, the clients that have a lot of their funds in assets such as 401ks or money markets, things of that nature, we have an asset depletion program that can take a portion of your assets, average them over a 12-month period, and generate an income for you. And I've seen a lot of people take advantage of that. With that program, you are going to need upwards of about 10 to 15% down. But in turn, you're depleting some of your assets, so you should have the ability to use some of that money to be able to purchase the home that you're looking for.
So
Now,
Keith, I just wanted to interject, because, we do this all day. We talk about down payments, percentages, closing costs, and things of that nature, just so that some of the people that might be on the call tonight might not fully understand what you're talking about,
sure.
Especially the benefit when you just broke down, because I think it's a very critical component as far as when you talk about, hey, 3% down versus 10% down, and then your down payment program that can allow for some of that money to go to your closing costs. Can you just kind of elaborate a little bit more so that people can get a better understanding of the value that Cardinal brings with these different programs and down payment assistance, closing costs, and those items?
So that's a great question, and I can definitely help you with that. So there's two major parts of a loan that require you to put cash towards it. And that is your closing costs and your down payment. And in some aspects, you're able to, in a certain environment, you're able to get a lot of the closing costs paid for by a seller. But right now in this environment, it's more of a seller's market. And what we're seeing is very few people are giving up those closing costs now. So in that case, that's where the down payment assistance program comes in, and it takes care of that first part, which would be your down payment. So then in turn, if you have some money to put to the table, which would be anywhere between 3 to 5%, you could use that for the other portion, the closing costs, and that will be able to allow you to get into a home. As a first-time home buyer, you're allowed to have anywhere between 3 to 3.5% of the loan amount. So that would be simple math. If you have $100,000 loan, that would be either $3,000 or $3,500. So $3,000 or $3,500. So if you go up the scale and you go from 100 to 200, that could be $6,000 to $7,000, and you just do the math from there. So that allows you to take advantage of bringing very little to the table compared to if you were an investor or you were someone that was buying a second home, or you'd be upwards of sometimes 5 to 10% down. So the first time home buyer program that we provide will allow you to put as little as 3% down, and very few companies allow that. Also, we have what they call the Borrower Smart Grant, which anybody that does a conventional loan will have the ability to get anywhere between $1,000 to $1,500 towards their closing costs. So that's a grant that comes directly from Freddie Mac that allows it, and it's used for any of their programs. And we're the #1 provider of that grant worldwide from any lender. A lot of lenders don't even offer that to their client. So we give you a lot of bang for your buck, where we're gonna help you pay for some of those fees that come up. Also, coming through our Houston branch, coming through MWR, we are gonna make sure we pay you back for your appraisal. Now, one thing I do want to make clear is you have to pay for that up front, but you'll see it in the lender's credit once the loan closes, because we want to make sure that we're not paying for appraisals that don't happen and the loan doesn't go through. So that's one thing that we will give to everyone that comes through the U.S. Housing Exchange in MWR, and also our Houston Cardinal branch.
And just to give them an idea, I mean, appraisals usually were around about 450 to 550. Now, currently, those appraisals, because there's so much demand in the market, they can be in the upwards of $650 and sometimes $700 for an appraisal. So, that's additional value. When you're
major incentive.
And those are, and you can take those funds and you can use them in other places. You know, you have your home inspection. There's things that you have, you know, you might want to take advantage of. And with Cardinal providing some relief to some of those fees, it allows you to get in a little bit quicker. It allows you to retain some extra money for, you know, after you get in the home, furniture, things of that nature, especially with the Borrower Smart grant of, you know, upwards of $1,500. That can definitely put some nice, you know, furniture and some stuff into your new home. Not to mention, if you're doing a refinance, it can help pay for some of your escrow build out. And, you know, right now with the, you know, the increase in the value of homes, one thing we're seeing because, you know, there's so many people in the market right now, the price of goods has gone up tremendously to build a house. We're seeing that, you know, people are having a lot of equity in their homes. So it's the best time to access it. Now, if you can access, you know, $80,000, $90,000 at 4%, that's very cheap money. I mean, you're not going to find that at any bank where you can go get a personal loan for 5%. You can barely get a car loan for that. So if you're a homeowner, definitely do the refinance program and see what's available. Also, people that didn't take advantage of the low rates, historical low rates at the beginning of the year, we still have very low rates. Take advantage of it. Allow that to free up some of the money for you. If I can save you $200, $300 a month on your mortgage, that'll then allow you to step into the program and have money to be able to become an investor with the U.S. Housing Exchange. That's another route to be able to get that $10,000 to be able to take advantage of that.
So, Keith, we have a question from Juan Dela Cruz.
Okay.
Who was asking, are we going to be able to service veterans who have those VA benefits?
Definitely. VA is one of the best loans out there right now. It's allowing the highest debt to income ratios. So I don't want to get too deep, but most of your cutoff is 50% of what you bring in, including all your, with the VA, we're definitely going to be able to help them tremendously. And that's a very good loan. Rates are very low there, and we close those very quick. So anybody that's a veteran, please reach out to us. Let us help you refinance. Let us help you purchase. And we take pride in helping the veterans out, definitely.
And one thing I wanted to say, now that Keith has had an opportunity to talk about the different programs that we offer and how we offer more programs than other lenders, or what happens, what that materializes for me when I'm working with our clients is they're saying they couldn't get a loan somewhere else, but we have the program that fits their needs. So we want to make sure that you guys take advantage of the low rates and the programs that we offer, because you may have checked with someone else and they just didn't have the ability to do what we do, because Cardinal Financial, we operate in all 50 states, and we also have a team. So you see Keith and I, but behind the scenes there, we have teams and departments that do all the different areas. So once we get you in, we have the ability to deal with so many loans because we have that full team behind us. So you don't see that. It's kind of in the back. You don't see the parts of the car moving. You see it going down the street. There's a lot going on. That's what I like to compare Cardinal Financial to.
I can give you an example of one thing that you might not know about. Did you know that you can have upwards of 5 to 6 people on one loan? You don't have to have just one co-borrower. So we have loans now that have 2 and 3 co-borrowers on a loan to make sure that you're able to get the type of house that you're looking for. So a good example of that is a child that comes out of comes out of college, and the mother and the father go on the loan together. That's 3 people on one loan, and they're buying a home for their child. That is a primary residence. The mother and the father have their own home. They live in their primary residence. But guess what? At Cardinal, we consider that a primary residence because your child will be living in that home. You don't have to live in that home. That's a very powerful program. Also, when you have older clients, then they put their children on the loan. So if you have 3 or 4 children, you can have all your children on one loan at one of your houses, as long as someone is living in that house, that is considered a primary residence. So a lot of people think that you can only have 2 people on a loan, and that's incorrect.
Keith and Charlene, just wanted to kind of put this out there so we can educate those who are on the call. One of the things I know I've been seeing a lot is when it comes into the mortgage approval process, a lot of people have had student loans and things of that nature. Can you guys kind of talk about, how student loans are handled and which programs might be appropriate for that, or what things that, the people can do in preparation with, getting ready to get a mortgage and buy a house?
Sure. You want me to take this, Charlene?
Yes.
Okay, not a problem. Okay, so with student loans, there's a couple of ways we can go about it. If you're on an income-based payment plan, we can take whatever that payment plan is. Most of the time, it would be at 0. And with that being said, we would just need documentation. One thing that's key with that is you have to go the conventional route. That means you have to have a minimum score of 620. But with that being said, we can take whatever the income-based payment plan says. If for some reason you're not on an income-based payment plan, then we can go Freddie, where they allow us to use 0.5 of the payoff. So basically you would average up all of your student loans and take 0.5% of that, and that would be your payment. Now, when it comes to FHA, they're a little bit tighter on their student loans. But if they're in deferment, they're required to use a 1% down payment for that. And then that will be averaged into your debt to income ratio. So the main thing that would be great is if we can get you over a 620 score, that opens up your ability to have access to all programs, conventional or FHA.
Great information. So definitely a lot of great programs with Cardinal. Are there any particular advice that you would give, our audience tonight, as far as, they're preparing, they're looking to buy a home? What are some of the maybe 5, top reasons, or 3 top items that you would suggest and give out to the audience today of some things that they need to be aware of, so they don't jam themselves up, so to say, before they start the process?
So go ahead.
I would start with one thing real quick, then I'll turn it over to you, Keith. I would say the biggest challenge is when people go out and apply for other credit before they get their mortgage. And then they've taken on new liabilities, which is going to potentially hinder or hurt their debt to income ratio, the amount you make and the amount you have to pay out, which, like Keith said, it has to be below a certain percentage, depending on the program. But Keith, you could take it from there.
That was a great aspect. A lot of people buy the car before the house. And then they buy a car for, $800 a month. $800 a month will deduct about $150,000 from your approval. So the $450,000 house that you're looking at, now you're going to go be able to buy the house for $300 just because you have that vehicle. If you were to wait a month and buy the house, then guess what? You're going to still be able to get that vehicle. So don't put the cart before the horse on that one. One other thing is the number one killer of loans is time. Rates change, programs change, your credit change. So if you're serious about getting a home, make sure you get all your documents in immediately. Make sure you listen to Charlene and get the accurate documents. If she asks for bank statements, give me every page of the bank statement, even if it's blank. If she asks for updated pay stubs, don't send me pay stubs from 3 months ago. Send me the most current, so we have the current year to date. If we have the current year to date, we can give you the highest qualification. If you're using certain things such as your 401k for a down payment or a savings account for a down payment, please get the most accurate, statement for those assets. Because all you're going to have to do, if you send in something that's outdated, you're just going to have to go back and get it again. And then that becomes a bad experience for you because you're constantly sending in documents that you think were accurate or appropriate, but realistically, just by, maybe a little bit more focus, you wouldn't have to do it but one time. And then I would say any documents that you do send in, build your own file. So if someone needs them again, they can access them immediately. So you're not having to search. What do you think, Charlene? Is those
absolutely? That's absolutely correct.
So time will take you out of the game in the mortgage industry. Someone will come in and offer a better deal. Sellers get very frustrated and they just cut the contract. So one thing we take pride in is closing quick and closing efficiently.
Yes. And I speak from experience that when a file is complete and everything is there, it moves like lightning. So I've had clients send me the documents in, and then by the time I get all of the documents, the first documents are old, and then it just kind of repeats itself as a cycle. And then as a client, of course, you're frustrated. You feel like I've given what you asked for, but we're very specific. I try to be very specific what I asked for, so that I'm providing a complete package so it can move smoothly.
There you go. So we have a question from Lysandra Davis. She asks, if someone is under a rent to own or lease purchase, can they utilize the program for the purchase, or is it required to select a property already in inventory?
Mark.
Okay, so say that again.
Lysandra Davis asks, if someone is under currently is under a rent to own lease purchase type of agreement, can they utilize the program for the purchase, or is it required to select the property already in inventory?
Well, if you already are under contract for a rent to own, you already have an investor who's allowing you to be able to buy that property. You wouldn't use us. You use us if we're going to be the ones buying you another property. So you got to remember, we're here to be able to help, but you got to remember at the end of the day, this is a flip. So for us to flip a property means that we have to buy the property, or it has to be bought at a discount. So then our investors will come in, our capital contributors will come in to partner with the program. Okay. So, if you already have a pre-existing relationship, and you're trying to purchase a property that you're already in, then, we can help you on the mortgage side. But for the Fire Your Landlord program, we would not get involved in that transaction.
Right, because step in, the ultimate goal is to get you into a home that you can purchase. So if you already have an agreement, the next most important part is to make sure you can qualify for your mortgage. And that's something we can help you with on our side if you already are committed to a property.
Yes.
So the best thing to do is get Mario and Charlene the actual contract so we can look over, because most of the time they're using a portion of that rent to be able to use for your down payment. Make sure we have no identity trust issues where, there's not anybody that, or know each other. Well, not know each other, but are family members. And then we'll be able to go ahead and just do a standard purchase agreement through Cardinal and go ahead and get you out of the lease purchase and then put that home in your name.
And plus, you also have to be careful. Some rent to own contracts, you got to look and see what your purchase price is actually going to be, because sometimes it's going to be way over what the actual appraised value is going to be. That's what they do a lot of times. So we just got to look at everything and make sure everything is doable. Sometimes they're having rent to own contracts with your purchase price maybe 10,000, 15,000 over what it's actually worth. So we got to make sure it's doable.
And we may want to break that down a little bit, is that when you're purchasing a home, the home needs to be selling for market value, which is what the appraisal verifies. So if someone is selling the home to you above that, then there aren't lenders who are going to finance the home at a value more than what it's worth, the current market value.
Absolutely.
So we have another question. Thank you for those response. I hope that answers your question, Lysandra. We have Martina Britt. She asked, does U.S. Housing Exchange help with clearing land on property owned by a family, as well as the build on the land, single and or multifamily properties?
Well, if we're going to do a deal on the land, we'd be responsible for everything that would be needed for that land: the zoning, the subdividing, the
Utility,
clearing of the land, the engineering, looking at the soil samples, getting the necessary permits, getting the, if we go modular, getting with the factory, if we go stick built, getting with the different builders and everything. So we're responsible for everything across the board. If it's a family piece of land, we only need to make sure that they have it structured to where they're getting paid for the lot, for each lot that's subdivided at closing. So then we don't have to pay for it up front, which will allow us to make it more attractive to do the deal. But remember, we only will do a transaction when we have an end buyer. So sometimes people are sending me land. We're not even looking at it unless we have a person that's going to buy that property, and we need to know what the market is, market of where your land is. So, if it's raw and utilities have to be run out and it's not going to be that attractive. So we got to make sure that whatever we're going to have to spend in getting the utilities out there, it's going to have to be conducive to what we're selling the property for. So that's why we would partner with one of our certified realtors. So they're letting us know what the going value is going to be of the properties after the house is built. So we do a lot of analysis before we get a deal done. So I'll say, let's run the scenario, hit us up, and let's discuss it.
So that was the other thing that I wanted to mention. While you have access right now to this team of experts, you want to give the scenarios to us, and if we can help you, we will let you know that you can make an assessment on your own. We can make sure we look at all the details and see between the programs we have, or if you need the USHX program before you can really be ready for your mortgage, we can help you instead of you trying to. That, to me, that can be the most frustrating thing, trying to figure out if something is going to work when you may have someone available that has the knowledge to really give you an answer on yes, this can be done, or no, you may need to work on this or look in this direction.
So great response. Another question from David. David asks, can this program help a seller sell property if the seller is looking to sell it to a particular buyer? And if the buyer does the buyer qualification program, would the program help the buyer obtain the loan to buy the property?
So you want to answer that, Todd?
Yes. Yes, that is core of our program, is that we want to match motivated sellers, which someone that wants to sell the property to a buyer, with a motivated buyer. So it already sounds like the deal is there, and we can definitely work with that situation and make that deal happen once we go through the approval process.
Well, there's a couple things that I want to add to that. It depends. If it's a mortgage transaction and you got motivated seller, motivated buyer, nobody needs credit work, we're just doing a deal, Cardinal just comes in and does the purchase, and that's fine. For U.S. Housing Exchange to get involved, and we're going to come into the middle, the seller can't sell it for retail. We would have to buy it wholesale. So there has to be something to where it makes sense to be able to do a deal. Somebody came and presented the same thing to me, a lady in Alabama this morning, and she's trying to buy the property. The seller's trying to sell the property, and she's like, okay, so U.S. Housing Exchange get involved. And I said, okay, if you were an investor and you wanted to buy a property The property's worth $185,000. You're buying it for $185,000. The seller's selling it for $185,000. Why would you believe an investor would get in the middle and there's no profit to be made? So you've got to look at something and ask yourself, does it make sense? So we only get involved on U.S. Housing Exchange if there is a real estate transaction to where there's profit to be made. That's how our capital contributors are going to partner with us. They're partnering with us because they want to make money on the transaction. So the short answer to the question, yes, we can help you. The long answer to the question is going to be depends. We have to get the variables in. Is the property ready, move-in condition, and any work to be done on the property? If the answer is yes, then yes, it's more attractive to us. If it's move-in, turnkey ready, there's no work to be done. The client, you're already credit qualified. It's going through Cardinal, and we're going straight into a purchase. So the answer is we can help you, but we got to know more specifics to see whether it's Cardinal coming in or whether it's U.S. Housing Exchange.
Yeah, great clarification on that, Mario. Great clarification.
Could I chime in on one scenario that might help some of the people at the market? So one thing where U.S. Housing Exchange can come in and help in kind of that scenario, if you're in a subdivision where the house is like one of the few that hasn't been upgraded, then what can happen is U.S. Housing Exchange can come in there and help you guys with the upgrade to the house to get more bang for your buck. Because this environment you're seeing where the house that hasn't been upgraded might lose $150,000 due to the fact that they're not upgraded. So if you have an older client that doesn't have the money but needs someone to front the money for the upgrade, then that's where U.S. Housing Exchange will come in, and then Cardinal will execute the purchase contract.
There you go.
Thanks, Steve.
Chantel Hardy has a question. How would this program assist me when I'm ready to build on my own lot? Well,
U.S. Housing Exchange wouldn't have anything to do with that. That would be Cardinal. If you're ready,
that would be a construction to perm loan.
There'll be a construction to perm loan. The only way U.S. Housing Exchange would be in the middle of that is if your credit score was not strong enough for you to be able to buy it. So then we would partner with you, put the money up, and then we would get compensated based upon how the profit would be. We just have to see how everything would happen. You would own the lot, and then we would have to structure the deal like that. So we could do something, but that's going to be based upon your credit because, as Keith mentioned, that would be a simple construction of perm loan.
Okay. Or you know what? I didn't go over the K loan. So there are the 203K loan is coming out where we can invest anywhere, $25 to over $25,000. There's a registered 203K loan. So what that is that's a primary resident wants to upgrade their property. You can come and let's say it's only going to be like $10,000 or something minute that you want to be able to do. Maybe you want to just put it in the kitchen, or you maybe want to do a couple of bathrooms and you need to go up to maybe $25,000. They have what they call a FHA 203K loan that will go ahead and front that money to you. And then in turn, it would just be a simple refinance. So those are options that you can look at too.
For that type of loan, just to give people a guideline, is there a different cutoff score for that type of loan?
So it's still based on the minimum 580, but I haven't really seen people with the 580 score get what they call an AUS or a desktop underwriting approval. So I like to say if you're at that 620, that's going to be a really good mark to be at to be able to get the approvals you want for all of the programs, especially for the rehab programs. The K loans, the construction to perm loans. So when I say K loans, those are just 203 with the K at the end. And you can always look those up. So those will be the rehab loans. And we do all those once again in-house.
That way people kind of know, are they maybe going to be ready if they want that type of loan, or do they really need the credit help to get to the right point?
Agreed completely. Now, once you get into where you want a major upgrade, that's when you want U.S. Housing Exchange to come in and help you with the total remodel. The high end finishes where you're just, you don't really want what they call a HUD manager managing your program. That is just it just becomes redundant and very time consuming.
So David has a follow-up to his question about a seller selling to a buyer. He says, what if the buyer is in the property like a tenant? And, we've had scenarios that are similar to that. And again, it all depends. We just need detail about what the seller is going to sell the property for. Again, we're investors, as Mario mentioned, so it has to make sense for us to make our spread and everybody else's happy with the terms. So yeah, that's possible to do. We just have to know the details as far as what the buyer's situation is and what the seller is looking to walk away with, and then what the actual ARV of that property is, and if there's
What's
work.
ARV, Todd?
After repair value.
Okay.
ARV means after repair value. That is the 3 digits that investors are always looking at to determine whether a deal makes sense.
Okay. So, all right. So I think that what can happen, you guys always can end up asking the expert and using the button on that. Because if you got technical questions, we don't want to throw people off because we're getting, because some of this stuff can get very, very, very deep. So just the main thing to be able to emphasize is that Cardinal can actually be there. They have every single program that there is. There's not a program that you're going to say, well, so-and-so got this program. Cardinal has it, I guarantee you. And the great thing on why we selected Cardinal as the perfect relationship is that they don't do something called overlays, meaning that if FHA states that your credit score could be as low as 580, they're not going to have investors that are going to say, you know what, your minimum score got to be 640. So if you got a 580 score, technically, you could get a transaction done if you have a 580 middle FICO score, not the scores that you see on your credit monitoring, because that might not be FICO scores. There's a big difference between them. But there's also other factors that's why we don't tend to just do loans at 580, because now it's not a slam dunk as far as it's a harder loan for it. But what I'm saying is that you got one of the best operations in the country that as at your disposal. So then now what happens is if you come in and you give us everything that we need, there's a very good chance you're going to be successful with us where other companies would reject you. That's why a lot of people are getting turned down by their mortgage companies, and they're giving it to us, and we're getting these transactions done. So that's what you have with Cardinal. That's what you have with Keith as an expert. That's what you have with Charlene as somebody that's running the operations of our mortgage operation. So you have a very good partnership, and you got a lot of people behind these two right here that's going to make sure that you're successful. So send your individual questions on the scenarios. That if it's complicated, just do it. And then if we can't answer it through just email, we'll pick up the phone and call you. So then you'll know that we can give you all the information that's necessary.
And Mara, before we close out, I just also want to mention, in addition to the programs, we also have the ability to do the volume. We have the capacity to do 50s, hundreds of loans a month. So don't be afraid to work with us thinking that, oh, well, there's too many people. We have a full team behind us.
Yes,
so
yes.
I would challenge you to bring it on, because we're ready. We're here, and we don't want you to miss out.
Kenneth, you're asking about a 680 score, but a bankruptcy. It matters when the bankruptcy is. You need the 2 years. So 2 years from the discharge date with the bankruptcy. As long as you have that, we're good. So if it's 1 year, you got to wait a year, or if you're going into a Fire Your Landlord program, it's 18 months, because we'll do a deal and wait the 6 months that's necessary until your 24th month. and then we'll let you be able to do the deal. So yes, absolutely what Charlene said, do that. So for those, the takeaway is, if you want to purchase or if you want to refinance, go to www.ushousingexchange.com. Remember, on the subject property, you can put your address on it, but on subject property, if you're doing a refinance, you got to use Houston, Texas. Okay, so that means you're going to put your home address, but put Houston, Texas as the city and state, and we will move the property over as soon as we get the application. Okay, so you're going to go there, purchase a refinance. It's going to take you to Octane. You're going to create an account. Then what you do is, when you go to purchase, put in subject property, Houston, Texas. If you're going to refinance, put in your address, and put Houston, Texas, and we will move it over. All right, so we're going to get Keith and Charlene back. We'll get them on next month, and they'll take you to the next. There's always going to be something that Keith will bring in of what you guys need to know. You'll always have the question and answer. You don't have to wait till next month to answer questions. You can go right on Ask the Expert. There will be a separate Ask the Expert button for mortgages, but for now, it'll be under real estate. And if I can't answer it, you can best believe I'll give it to Keith. Keith will answer it, and then we'll keep it moving.
Correct. Exactly. Thank you.
Yeah, somebody was asking, do you just put Houston, Texas, or do you put Houston, Texas and a zip code?
No, just Houston, Texas. Yeah, we'll move it to your appropriate city and state as soon as we get the application. We'll put that in there, and then also, we'll put in and find out what zip code you want to be in if you're doing a purchase, so then we can make sure that we're going to get the appropriate tax structure and everything based upon that zip code of that municipality.
Correct.
So we're coming to the top of the hour. I know this was definitely a good dialogue, good information, great questions from the audience. Before we end this broadcast, Keith, Charlene, Mario, is there anything else that you want to leave the audience with at this time?
I mean, I would just say I'm excited about the collaboration with all the major companies. I think it's a great opportunity if you can take advantage of it. And like I said at the event, let's get to work.
Well, I just want to thank everybody for their time, and I'm looking forward to working with you.
Absolutely. Same as here. We monitor things. We know certain things are lagging as we're getting all of our information merged with MWR Financial. They're working on a portal that's going to make it a lot easier for you guys to be able to do business. We're going to be able to open back up for the mass production for the LLCs. I know they're going to be doing an announcement to allow a lot of the majority of the people to get their LLCs. Anybody that's ordered an LLCs, you should be getting it within the next 5 to 6 days. We had a delay on how we have to move the money over to the source that's processing them. We figured that out, so that's going to actually come in. You always can be able to ask for status, and we'll get that to you. Chief works very diligently in making sure that he's on top of everybody's needs. So we look forward to keep working with you, and we thank you for your attention this evening.
So with the last word from Mario and the team, again, we thank everyone on the call. Stay tuned. We have more information as we continue to evolve the program. So have a great night, everyone. Until the next podcast next week, we'll see you then. Take care. Be blessed. See you soon.